Okay, here we go. Here we are again. I am. This is Scott Schang. I am a branch manager of a mortgage broker, Bywise Mortgage here in Southern California, and I have a friend of mine here, Jeb Smith, Realtor at Coldwell Banker.
Yep. Yeah.
And so this is my second edition of the California Real Estate Report, where I have no idea what I'm doing. I'm just popping on mine, and we're going to talk about stuff. If I have cool friends that I think we can talk about some things, we're just going to talk about. We talk about this all the time, and you and I were talking about this. I never think this stuff is interesting. Right. I mean, who cares about mortgages? But I've been writing on Find My Way Home for 10 years now, and I've got over 1 million visitors that Find My Way Home. So I think this stuff is boring, but some people think it's interesting. So I figured let's run an experiment. Let's get on here. Let's talk about stuff that's going on in the market. And really, my goal is always for people to see what professionals talk about when they're not trying to sell you. No, and that's the big thing, is because when you go and you're trying to qualify for a mortgage or you're talking to a real estate agent, you know, a lot of times they're trying to tell you the things that they think that you want to hear so that they can do business with you. So you and I just sit here and we get crazy and we talk smack and we do whatever.
Yeah. And I think another thing that makes it interesting now is because the market's changing, right? So we've been having the same conversations over and over for close to a year. Yeah. And so now that the market is changing, it's not only giving us new things to talk about, but we're having different conversations with people buying and selling homes, people with, refinancing, that sort of thing. So,
and what's really funny is, these last 10 years, I mean, after the big crash, that was a super manipulated market. I mean, we had to react to it and we had to do what we had to do to kind of get through it, but it wasn't a normal market. And when we say the market is changing, I mean, it's almost like it changed on a dime is what it seems like, but exactly. It really hasn't. It's been getting to the point. I mean, the Fed stopped buying mortgage-backed securities like at the end of last year, and it's taken a whole year for the market to kind of correct. And I kind of think we're in a normal market now. You've been in the business over 15 years. I've been in the business about the same. Right. And this is kind of normal, right? What the market's doing, home prices are starting to, react to interest rates going up a little bit. And actually, this is what I kind of wanted to lead with is interest rates are dropping. So in August, and we talked about this last week, I think, in August, interest rates shot up almost 0.75%, like over 60, 90-day period. It's given a little bit back, where we've got back about a quarter, and we're seeing a little bit of that coming down. Are you seeing that effect on the real estate side at all? Are people reacting to that?
It's funny. I mean, our market, I would say it's really hard to pick the date in which it happened, but I would say 60, 90 days ago, the market kind of went to a halt, right? And could be a seasonal effect, right?
Because rates jumped really fast 90 days ago.
We expected, we expect the market to slow down as the school season ends and people get back to normal way of life because the holidays are coming, et cetera. And we saw that. But prior to that ever happening, the market slowed down. And it slowed down to a point where I would have a new listing come on the market and not even have a showing at all. I mean, which is really, really weird. But then I would say, 30 days later, I don't know if it was a rate change or something that happened there, but buyers started to come back in the market. So I think
anytime there's a massive, now when the rates shot up over about a 30-day period, they shot up like 0.5%. It was quick. And that always causes a knee-jerk reaction. I mean, buyers start to see it. You're getting less buyers. That's pretty quick because the lender's calling you up and they're saying, hey, wait a minute, that pre-qualification that I gave you 2 weeks ago is no longer valid. You now qualify for less. And then what you start seeing is real estate agents saying, well, I don't have enough traffic. So they start doing price reductions. So when you're on there, you're seeing price reductions. And then buyers are kind of like, hey, wait a minute, I'm going to step back here and let's do a wait and see, kind of see what's going on. So interest rates are dropping, and they have dropped. If you are in a position to lock, I would. Everybody always asks when's the best time to buy. My answer is the same every time: as soon as you're in a position to, because real estate is a long play. right? It's a long game. And, but if you're in a position, this is a great opportunity. If you're trying to refinance, this is also kind of a cool opportunity because you probably won't have any payments until like February if you start refinancing now. And, and actually I I do want to talk to you about this now. I've got some other things that I want to talk to you about, but it's kind of a good time to buy during the holidays, right? I mean, this is an interesting time because we were talking about this. Anybody that lists their home during the holidays, there's probably a certain level of motivation.
That is something that I talk about in other videos that I've done as well. And is if you're going to list your home and have it active on the market during the holidays, chances are you have a big why that you need to sell. Otherwise, you wouldn't want people, because it's a time of the year where people are with families, they have people over, decorations up, just a lot going on. And you don't want people trafficking through your house if you don't absolutely have to. That coupled with even, we're in Southern California.
Do you think it's more investors that are selling during the holidays? Maybe.
No, I mean, I think it's people that really need to move. I mean, these are people that have a motivation to move. I mean, the people that I have listed currently, they need to move for one reason or the other. They either have something going on where they need to list their house now. And I do have clients that are going to be listing in, say, January, February. And those are people that we're having conversations now saying, do you need to put your house on the market now? And if the answer is no, then my advice is to wait, because it's not the best time to put your house on the market. I mean, I would not list my house 2 weeks before Christmas unless I had to do so.
But if you're a buyer looking for a bargain,
there's plenty of it out there.
And you're not going to have a ton of competition.
Exactly. And I mean, perfect example, I mentioned it in a conversation we had was, there's a colleague in my office, her client bought a house in the mid 900s less than 3 months ago, ended up not liking the location for one reason or the other, put it back on the market, got down to as low as I think 875-ish, and ended up going into escrow for less than that. So the property appraised for 950-ish 3 months ago. And he just took a $70,000, $80,000, $90,000 haircut. Exactly. Just because, and he wanted to sell it before the end of the year for tax reasons. And so it's, it may be a good time to get a deal on a property. You never know the backstory. But at the end of the day, if you're an active buyer and you want to buy a house and the right property presents itself on the market, it's as good a time as any to make that move, because what's going to happen, in my opinion, after the first of the year is the competition is going to come back. More buyers are going to come back to the market. We don't really know exactly what's going to happen with rates. You can touch on that. I mean, but rates
crystal ball broke 10 years ago.
But it's probably going to stay relatively flat right after the first of the year, maybe even come back a little bit. I don't know. But you're going to have an increase in inventory. So you're going to have more competition, more buyers out there looking. It's typical story. I mean, it's, you like a property, chances are somebody else does too. So, the first one to make the move is the one who gets it.
It's funny. It's just all about timing. It's when you're ready. And you can't forecast this stuff. You can't guess this stuff. That's why I say, if you're in a position, it's a little bit of insider information. If you think you want to buy a house and there's homes for sale out there, I would get out there. No. One of the things, and this is kind of how we decided, and I said, hey, we need to have this conversation. This is something I want to talk about on the real estate report deal here. When markets change, it affects people in different ways. And one of the things that happens is when you see interest rates go up, it puts downward pressure on pricing.
Right.
And when it puts downward pressure on pricing, what that means to home sellers is now they're faced with the prospect of making less money. Right. And sometimes, almost everybody, let's face it, everybody's looking for a discount.
Absolutely.
And you were telling me a story about a company out there, and this has been going on for years. It used to be, the old thing used to be, when things were slow, real estate agents used to say, give me $99 and I'll put your home on the MLS, right? No. Multiple listing service. Right. But now you've got these companies that are coming in and they're offering discounts, but it's not exactly what it seems, is it?
Well, no, that's the thing. Is like in a good market when there's low inventory, which we've experienced for the last 6-7 years. Not to the extreme that we were 90 days ago or earlier this year. But since 2011, the inventory has been slow, and it's, been like that for some time. And in a market like that, what happens is you get a lot of companies coming into the market wanting a share. And so over that time period, you've got a lot of discount brokerages coming in. These could be your Redfins, they could be your Purple Bricks, your Open Doors, those guys, the guys that are coming in willing to list your house for less money.
Let's focus on the Purple Bricks real quick, because you had an experience. You had an experience with that, and what you told me was actually pretty fascinating, because there's a couple of things to this, but the first thing that I thought was fascinating is they're offering a discount. They're offering a discount to the seller, with to me, which is a huge catch that I want to get to, but they're still charging the seller the money to attract the buyers.
Exactly.
So it's not like when they come in and they say, we'll sell your home for, what was it, $3,500? $3,600
or something.
$3,600.
Yeah.
That's just what you're paying the person that's responsible for listing your home,
exactly.
Right?
Yep.
But they're still paying the buyer's agent to attract a buyer. So that part of the market didn't work. All they're really kind of doing, and you know a little bit about this as a listing agent. What do you do that you cannot do if you were in that type of? Well, explain that model a little bit, because you were explaining it to me, and my head was spinning because I'm in the industry and I get it, but I don't think consumers do.
Well, it's an interesting business model from the perspective that I'm paying a flat fee up front, whatever that fee is. It's $3,500, $3,600, whatever the fee is. As a seller to a company to list my house, right?
Yeah.
And I am telling the consumer, if you will, as that company, in this case, say it's a Purple Bricks or someone, that I'm providing you a local market expert, an area expert. Mm-hmm. When the truth of that is that person may not know your market at all. They may be it may just be the listing agent that is the closest to that area, or have that zip code in the way that they hand out listings. And at the end of the day, I may have no idea about your neighborhood, your area, et cetera. So first off, I'm starting off, you don't know the person that you're getting. I mean, you're interviewing that person, but at the end of the day, you don't really know the experience they have in that area.
Can you say, well, if you don't want to work with that agent, you're not working with that company though, right?
Well, that is my understanding, is that person owns, if you will, that zip code. That territory. So if you're going to list your home with that particular company, you're using that agent to do so.
Another thing that I thought was interesting about this is when you list a real estate agent, or when you list a home, mm-hmm. You don't get paid until the home sells.
Correct.
Right? But if you work with one of these companies, you're paying that money up front. What happens if you don't sell? What happens if the home doesn't sell?
Well, my understanding, not even that side of things. So the person that is selling the house, the listing agent in that case, has no incentive, first off, to sell the house, because what happens is you've got a discounted listing side commission
just for
taking the listing. And my understanding is that those people get paid that fee up front. So when you list your house, you're the seller. You sign a listing agreement with me.
Peanuts compared to what
I think it's $1,000. So I make $1,000 by listing your house, and that's all the money I've made. So I've already made my money prior to your house ever going on the market, ever selling, ever doing anything.
But when you're working with a client, you're probably spending as much or more than that just to try to market the house properly.
Absolutely.
Correct?
So the 3,600.
So who's marketing the house then?
No one's marketing the house. And that's what's funny about the whole thing, is that the 3,600 gets a sign in the yard. It gets photos taken and it puts on the MLS. And what most consumers, I don't know if they know, but when I put a property on the MLS, it automatically syndicates to all the major sites. So I'm not doing that manually. It's automatically going out there. So their model gets that as well. And in a market where
their market will push the button?
Will push, essentially, right? And so,
wow,
but all of the additional things it takes to get a house sold, like, staging, professional video, any just listings to the neighborhood, door knocking the neighborhood, letting people know that this house is on the market.
Well, and being an expert in the community, knowing who to talk to, and I know you have relationships with all the other real estate agents in the community. So you're talking to real estate agents, you're making deals, you're negotiating, you understand the whole thing, you're doing all of the marketing, and and here's the part that bothers me, and this bothered me. Listen, I think Redfin has probably one of the best home search sites on there. I think it's better than Zillow.
They've done well.
But what I do not like about that model is it attracts people who are not used to working for their money. That's a hard way to put it, but it's a lower paid model. When the professional is being compensated at a lower level, it's naturally going to attract a level of expertise that is potentially lower than somebody like you, who has to go out there and earn their business every single day on every single deal. And you've been doing this for 15 years. You're probably not going to work for $1,000 because you have 15 years experience, and you know it costs more than $1,000 to sell a home properly.
Well, I think what you're trying to say is that any agent that's actually doing business isn't going to do that model, right? So you basically, what you're hiring is an agent who doesn't do business to begin with. Otherwise, they wouldn't work under that model. And secondly, or it could be a newbie agent in that case. But the model is that, you're making $1,000 per deal, for example, on these listings. And the idea is that
I've already
gotten paid, but the idea is that this company is going to give me 15 or 20 of those. So I'm going to have 20 listings. Anybody that is in this business and works a day-to-day operation in the real estate business knows that as a single person having 20 active listings, not having an assistant, not having the other pieces of the puzzle to assist you in that, it's a very difficult model to run to begin with.
Calls, you're not going to be talking.
I've already made my money. So what would be the incentive for me to help you get the highest price for your house? The incentive in that case, the way I look at it, would be for me just to get your home sold. So not to negotiate, not to provide you the level of service that you deserve as a seller.
Yeah.
Because what I'm trying to do is get through the inventory. Otherwise, I'm just bogged down with, money I've already made. And so there's very little incentive on that side to help the seller, at least in my,
So,
my thought.
How I want to wrap this up then is this comes down to one thing, and it's when you do business with a company, and for me on my side of the business, it's these big box lenders. I call them telemortgagers. Right. If you're seeing a TV commercial on TV, or if you're hearing radio commercials and things like that, these companies are spending millions of dollars to convince you to do business with a company. But the reality is, this business, that everybody's an expert until you need one.
Exactly.
And in this business, you need experts because stuff pops up all the time, and it's nobody's fault. It's the nature of the business. There's a ton of moving parts. There's a lot of people that are involved. You need somebody on your side. It's basically going into court and saying, I got this. I subscribe to LegalZoom.
Right. No,
right.
Exactly.
I'm dialed. Right.
Yeah,
I've got this thing done. And it's, to me, that's what it is. I can never stress the importance. And this happens to me all the time, because if I get a phone call, there's a lot of times that I'm trying to talk people out of what they think they want, because they're not asking the right questions. They're not framing it right. They're like, I want all of these things. Like, I want no points.
Right.
Okay, great. Did you know that means a higher payment?
Right.
Right. Maybe you don't want no points. Maybe
education.
You want a lower payment. Maybe you want the education. I'm like, listen, let me lay out all of your options, and you may choose that one, but don't get attracted to that. These companies that you're talking about, and the companies that I'm talking about, they are not experts. They are advertisers.
No, absolutely. It's a lead generation. They're there to make money, right? And we're in the business to also make money, but
of course,
it's a different it's a whole different perspective. I mean, what happens in a real estate transaction where on a transaction where there's $1,000 commission to a listing agent? I've already been paid. And there's a buyer in escrow. The buyer brings back a home inspection report. There's a list of items on there they want repaired. The seller says, I'm not doing it. The buyer's agent says, well, I'm willing to give you, a little bit.
Listing and then there's agent's like, I got paid.
And then there's a lot of money that, a lot of things that still need to be addressed on that inspection report, and nobody's willing to do it. Well, as a listing agent, like a listing agent that actually works for his money and gets paid, you're willing to do things in order to make deals close so that everyone gets what they want. Yeah. You're not there to make every dollar. You're there to make sure that people are happy. It's good customer service to make things, maybe you're not giving them money. Maybe you're doing something in order to negotiate and make that go away. But somebody making $1,000 and there's no incentive for them
and
to.
here's another scenario that I've run across. I don't know if you've personally done this, but as long as you've been in the business, I imagine you have. Sometimes you give up part of your commission to make the deal work.
Absolutely, you do.
Right? But you're not going to do that if you just got paid $1,000 and you've got 27 other things. You make stuff happen because you're a professional. The only goal is to make everybody walk away feeling like they did it, that
they got
the best deal.
Absolutely.
Right? And you have the incentive to do that because you're invested, and nobody wins until everybody wins.
Absolutely. And I mean, that is part of the business model is when you hire a professional, you get a professional. You're not getting someone that does this part-time or that wasn't successful in the business and they took a different route. I mean, you're getting somebody that, you should be getting somebody that has the experience, has been through these different scenarios and can help guide you through that process. When you get someone that has no incentive to assist you or negotiate on your behalf, at the end of the day, you're getting what you paid for, which you wanted a discount. You're getting a discount, and that discount is coming in the form of less money at the end of the day on the purchase price, probably. Whereas if you're hiring a professional, and you're guided through that process correctly, you're actually making more money at the end of the day than you would have even if you had gone the other route.
So what do you think? Do you think we bored the hell out of everybody?
I mean, probably, but and here's what I want to say about this one. I mean, because in some cases in a market where there's very, very little inventory and these people have a special house that a lot of people want, that model works. Let's be honest. There is a time and place for that model. I will say that. As a real estate agent, I will say that.
You're still potentially compromising. You're potentially compromising that when you need an expert, there isn't going to be one there for you.
Correct. But that model can work occasionally. But what I think the market that we're headed into, which is a market with more inventory, more competition out there, longer days on the market, now is not the time to hire a discount broker or a non-professional in the business, your cousin who just got his license. That you need someone to help you negotiate that's going to do the things in order to help you maximize exposure, because exposure drives demand drives price.
And you absolutely nailed that, because the exact same thing is when interest rates are super low, those discount models where you're doing refinances, trust me, they don't have the lowest rates and fees, but they have great advertising and you're not going to really get hurt. I mean, they're going to be close and it's going to be fine. But when you get into a purchase money market, these companies are not equipped to be able to navigate that type of a market. So, Jeb, thank you so much. I appreciate you being here. I hope somebody is, I see some Z's going across. I didn't even know that was a reaction on Facebook. Some little sleepy guys. So I appreciate you being here. Maybe we'll have you back another time.
I appreciate it.
We'll
absolutely.
Sounds
good.
Talk to you later. See you guys.
All right.